So why are we here? Energy transition has already left the station. We are seeing incredible amount of capital coming into our sector to build new wind, solar, and storage projects for three reasons. First, these technologies are mature. Second, they are at price parity compared to the alternative solutions. And most importantly, we have policy support in the US in the form of the IRA and outside as well. But we're seeing the ripple effects of this coming into the adjacent sectors. Industrial decarbonization, CJ mentioned this in her talk, is hard because we have to work with incumbents, work with existing infrastructure. So it'll take time, but we are seeing tangible projects being penciled here. And maybe the most interesting development that none of us, if we had been here 12 months ago, would have thought of is the demand pull from data centers. You can imagine the amount of power demand that's going to generate. So what does this mean for us in the sector? The mainstreaming of clean energy, what we mean by this is the fact that wind, solar, and storage are at price parity, and therefore what that is causing is for us to rethink how we power mobility, how we power our buildings, and approach industrial decarbonization. That's creating a lot of opportunities. We're seeing entrepreneurs come into the space, we're seeing new technologies being built, and new business models being created. This creates a huge pool of opportunities for us, and we see this thanks to our sector experience and to the corporate partners that we have at S2G. But we're not the only ones seeing it. There's plenty of capital being raised in the sector. Close to $270 billion have been raised across these different asset classes, from early VC to infrastructure, over the last 5-6 years, and more is being raised as we speak.
Thanks, Bala. Before I continue, I should also add that we only partner with good-looking portfolio companies as well, and much more importantly. That's right, Kurt. So I think, as Bala mentioned, the scale of the opportunity has been apparent to private markets for quite a while, and we've seen this wave of private capital enter into the space with a view to obviously trying to profit and unlock value from it. The reality, though, is, and this is a difficult reality to acknowledge in some quarters, is that to date the private markets have not done a good job at translating that capital into investable opportunities for the public markets. The graph here, it's kind of an interesting graphic. It's just illustrating the committed capital, essentially capital that is sitting in publicly focused funds focused on sustainability transition in the United States and in Europe. It amounts to nearly $3 trillion. And juxtaposed to that is the scale of the current investable opportunity. This is the S&P Clean Energy Index, the totality of the enterprise value of that entire space. And there's $1.5 trillion delta between the money that's out there looking for things to do and the views today about what is investable and what that's worth. And this really is an indictment of the effectiveness of the private markets for delivering on transition. We here have been very interested in this particular problem for a long time. And we spent a lot of time really trying to understand what is it with respect to this sector and how our private market engagement into this sector is currently challenged with respect to unlocking a lot of that value. And Gokul, our colleague here, Gokul led a really interesting study this year looking at the realities today in the private markets, in the private capital markets, with respect to the amount of money looking for specific types of opportunities relative to the actual scale of those opportunities available. And what the analysis basically revealed is that today's private markets are highly siloed with too much capital targeting earlier stage opportunities and a very significant deficit at the growth stage. And we see this in our day-to-day experience. Finding opportunity, there are so many tremendous opportunities, and by the way, many of them in this room, for whom a $50 million check is the right size check. It's not a $15 million check, and it's not a $150 million check. $50 million check, and that unlocks a sustainable path forward for growth for that company. We've termed this the missing middle. It definitely is a missing middle issue. And it is an opportunity, I think, that broadly speaking, the markets are trying to begin to move towards rectifying. We really do feel that we're in the vanguard of this. Structurally, it's difficult for the existing markets to flex to solve this problem in the nearer term. We're fortunate at S2G in having a structure in place that is targeting this from day one. And then crucially, and I think this is very, very important, we are at a moment today where for the sector, there's a particular need for this type of capital over the next 2 or 3 years. We are super fortunate to, as Bala mentioned, have partners like all of you in the room here working in our portfolio today, working hard on delivering solutions across this entire transition landscape. This is a period of time, the next 5 to 10 years, that the broader challenge with respect to climate change and the energy transition, I will posit it, is going to be won or lost within this decade. And these folks here, and I hope that those of you who are not partner companies get to meet some of these folks. These folks are all working tirelessly to deliver that across the seams, looking to be innovative and looking to have impact. We're proud to be able to partner with them, and we're looking forward to doing lots more of this in the years ahead.